Welcome to another week in review. We're looking at the trading week of August 18th, 2025. Don't have much this week in the way of data that's going to be super market impactful, in my opinion at least. We do have Friday, we have Jackson Hole, the Jackson Hole Summit, and we have Powell speaking on Friday, but we'll get into that. But that's only the only real thing on my radar. So Monday, no major data that I'm paying attention to. Tuesday, no major data that I'm paying attention to. A couple earnings I'll talk about too. Wednesday, 10:30 a.m. we have crude oil inventories. I'm mentioning this now because I've been trading a lot of crude. It's just been an easier trade, in my opinion, on a lot of these days. 11 a.m. we have Waller speaking, and then 2 p.m. we have the FOMC meeting minutes getting released. So we will definitely see some volatility around 2 p.m. on Wednesday. Thursday we have jobless claims as normal, 8:30 a.m. and then 9:45 we have flash PMI. Friday, 10 a.m. Powell speaking, like I said. So that's going to be the big one on Friday. I don't know what he's going to say. I mean, last time we had a meltdown. Last time, I guess 2 years ago, we had a meltdown with the Jackson Hole speech with Powell, basically talking about how the market was not in a place to be changing rates. It's a very interesting position we're in right now from a bigger perspective, that we're kind of in the same spot where the market is currently Fed swaps market is currently pricing in a 90-ish% chance that September is going to cut. If that line moves on Friday after Powell's speaking and that market prices out a cut for September, which again, I don't know what the outcome of this is going to be, but if they do, I would look the fuck out, basically. Just be careful, because when that line moved, a couple years ago now, we had a really serious move in the market as equities basically tried to reprice, what interest rates we're going to do. That's entirely possible it happens again. So I'm not expecting that, but just have to be open that Friday could potentially be volatile for sure. So getting into earnings, again, not much. Tuesday morning we have Home Depot, Wednesday morning we have Target, and then Thursday morning we have Walmart. So we've got some big retailer names coming in, which will be very interesting to see. Again, not supermarket moving, but definitely interested in the broader market implications of, how their sales are reported and how their guides look, because obviously the narrative right now is that the market is very strong, consumer is strong, etc. So if we see these names start to guide down, that'll be interesting. Again, not super relevant for intraday trading, but just interesting to see. So moving into S&P 500 futures. Last week was significant in a couple ways. So last week we talked about, in the last week's video, we talked about this giant prior balance on the weekly that we were trading inside. Last week we actually broke out of it. So on that Tuesday we had this big squeeze up. We actually broke out of that 64.50 range. And we spent the remainder of the week basically balancing on top of this and forming value on the weekly higher and accepting higher outside of this prior balance range. It's significant where we stopped. So we hit the 25% balance extension, which statistically is very common as far as where you'd be looking to see balance ranges trade to. So we basically touched it to the tick, and that is the current ETH all-time high. So we have an all-time high set in the electronic trading hours. Those generally need to be revisited and cleaned up. Whether or not we do that this week is obviously the question. The big thing here for me is how we trade around 64.50 to 64.40s. So I think this range here, and I'm sure everybody under the sun is looking at this because it's very obvious as far as what needs to hold. But I think it's important to talk about this because there's a couple things. We were able to frame value higher. We framed value above prior balance. So this gigantic trading range that we broke out of, we were able to hold and close outside of it. So what I want to see this week early on is whether or not there's interest in finding acceptance and continued acceptance, I should say, outside of this prior 6-week balance range and outside of this prior 3-day balance range that we built above this. So if this market is strong, any attempts to get through 64.50 to 64.40 are going to be bought right back up. So we'll see a good amount of absorption down in here. We'll see big wicks on higher time frames, and we won't see higher time frame closes below 64.50 to 64.40. If that's the case, if we're holding the bottom of this range right here, then I'd expect to move back up into last week's POC is an easy target at 64.80s, but I'd expect to move back up into the all-time high range and hopefully clean up the 65.08s, the ETH all-time high that we have. So that's going to be the big thing I'm watching, is whether or not, we have a 3-day balance. The weekly is one time framing higher, the monthly is one time framing higher, and the daily is currently in balance right now. So this consolidation, the meat of last week's value, it's basically how this breaks. So do we have, inability to sell below 64.50s? Do we see, any attempts to get below this? Do we see, again, a lot of absorption, a lot of flips on the tape, big wicks and higher time frames, and can that get us back up into 6500s? If we see some traps set in here, that's definitely what you could see. So you could see potentials to try and sell below 64.40s, and then a decent flip on the tape and wicked right back up. And then in that case, just treat it as a failed breakdown trade and look for those long rotations back up into prior all-time highs. If we're accepting outside of this 6500 range, then we have targets higher at 6520s and up into the 6550 to 6560 area. So I talked about this last week as well. Again, this whole range is very significant on higher time frames. We're also getting into the 2 deviations away from yearly mean. So again, what I talked about on the NASDAQ actually happened last week. I was basically saying on NASDAQ, you have to be careful up into this range. So we were hitting the 200% extension from this giant trading range that we carved out, a multi-year significant trading range. We hit the 200% extension basically to the tick, and we ran straight up into the second deviation away from yearly mean, so yearly VWAP. This area up here is what I talked about last week, areas I'd be interested in fading on potential exhaustion prints and on potential failed new highs up here. And this is, the primary trade that I actually took this week was looking up here and selling the 24.50 range. That was the primary trade I actually took. And I don't know if I'm assuming you follow me on Twitter. If you're on this YouTube channel, if you don't, you can do that. But you can see how I took that trade and how I broke it down. So we're getting close to that on ES as well too. So this range is significant. And again, if this market wants to melt up, then we need to see a pretty decent punch through this and just a complete disregard for any type of reversion. So we want to see, a decent amount of effort have results and get pushed back through this, or potentially the opposite. We want to see, lower volume drifts back up through, and then when people come back on desk, we want to see higher volume continuation punches back through. But this area up here, 65.60 to 65.50, is going to be extremely significant on pretty much all time frames. So if we do accept away from 65.08s, then you just have to be careful. This will be a target for me to get up into this 50 to 60 range, 20 first, but then 50 to 60 range. And then again, up here, I'd be open to fading it on failed new highs and a decent offer if we see that start to form. The flip side of this scenario is if we actually have a true breakdown back through 64.50 to 64.40, it will not be looking long. I will be looking for the short rotations to get us back down into the meat of these prior distributions, which are still yet untested. So I think if we start to see 64.50 to 40 area, if we see this range offer, if we see higher time frame closes below this, then this could turn into a failed breakout of balance, look above and fail, you can call it. And I'll be looking for the immediate rotations back down into the 20-day moving average on the daily, which is 6400s. And then I'll be looking for the test of the weekly distribution, of the week prior to last week, because we have a naked weekly POC down here, and we have this moving average down here as well, which has been important to how I'm viewing the higher time frames of this market. So inability to hold 64.50 to 40, again, I'll stay short. I'll look for the move down to 6400s and hopefully down into 63.80 to 63.50s. And if we're able to basically hold this range, so again, we see potential failed breakdown trade here. We see a big wicks on higher time frames, see a lot of absorption. We see a lot of buyers start to step in and continue to lift this market. I'll stay long. And if we accept outside of last week's value, outside of last week's range, above prior all-time highs or current all-time highs, I should say, I'll stay on the long side and I'll look for these targets up into 50 to to 60 to get hit, and potentially I'll be looking for a fade up here. So basically playing how this range, how last week's value, last week's distribution, playing how this breaks, how this daily balance range, the meat of this distribution, breaks directionally. So hopefully that makes sense. NASDAQ is going to be basically the exact same thing. The difference in the NASDAQ is it's quite diverged. So we saw some pretty intense selling happening on the NASDAQ on Thursday and Friday. We didn't have a full, liquidation break on Friday. It was OPEX as well, so I take all of this with a little bit with a grain of salt. But as far as what was happening on Thursday and Friday, it was significant. It was significant selling. The immediate pivot is going to be, you can use Friday's low basically, but it's going to be the 23,750 to 730 range. So basically Friday's low, they held right where they needed to. So they were able to, they as in buyers, long trades, long participants, long enjoyers, whatever you want to call them, were able to hold multi-week balance. They were able to hold the 750 to 730 range. Again, if we start wicking down below this, if we see no ability to sell below the 750s, the trade is going to be, potentially a failed breakdown right here. And we're going to look long and try and get back up into the meat of last week's distribution, up into the 950 range. And if we accept above 950s, I'm going to be looking for those continuation trades. I don't have it marked up here, but eventually up into the 24,150 to 24,200 area. And again, that's around where the yearly +2 is going to be moving, because obviously it's a deviation from mean, so that mean's going to be rising. It'll be somewhere up here. And again, I'm very open to fading that area as well. So potentially, again, if certain conditions are met. So the other factor here too, again, simple pivot using the 730 to 750 range. If we can't accept above this, if we can't hold this, if we see this start to offer and some volume get put in below it, it's going to be a rotation to last week's low, to 23,580s. And again, probably more likely down to the 20-day moving average at 23,500s. So going to keep it simple. Basically, ES, NQ, do we hold outside prior balance? Try and keep your view and try and keep your intraday views fairly simple with a market that's ranging like this, because we are breaking out, we are framing higher, but these days have been fairly range bound as far as intraday goes. So your opportunities are, not great. It's, a couple places to manage, unless you're a scalper, which I'm not, but the bigger rotations and day trades for me, there's a couple opportunities you get a day. Don't overtrade this. It's very easy to get absolutely blown up. And all of this took very limited trades, and I actually stuck mostly to oil last week because it just was the simpler market for me to read. I'll talk about oil a little bit, just to give some context around it. So I am looking for, in the next little while, if not already, I am looking for a decent low to form on the weekly. We're not quite there yet. I do think we're potentially trying to find a low range. We could potentially even trade down all the way to 57s. I find it unlikely that we'd start accepting below that 57 range. I do have some long exposure just from commons in my personal account, and I'll be adding down into 57s if we get down there, but I am looking for a little bit of a larger reversion trade to start forming on oil. And where I basically be trying to manage oil for me is mostly automated at this point. I have some order flow signals, as well as some other signals that I have that are custom, that I'm still working on a few of them. Some of them are still in development, but some of them are live in production. So mostly automated for me, but we have last week's value, again, framing lower, so we could see a little bit of continuation back down. The thing I'm watching, we also have roll, so the V contract will be the new contract that opens on Monday, but the big pivot for me right now is 64, so $64, we'll call it. Let's call it flat, simple. Any acceptance above 64, I'm looking for a bigger reversion trade up into the 65-60s, more likely 66-40 area. I'm looking for basically this range to eventually find a low. I think as far as the short side of oil, I'd be looking for breakdowns potentially below last week's value, so below 62.60s. I think you could potentially look for a move down into 61, down into last week's low, and potentially down a little bit lower into the 6140s range if we start offering 6250s. So something to consider. I think the one thing I would really pay attention to on oil as well is when when most markets are range bound, but especially when oil is range bound, it's very prone to mean reversion, especially on the weekly frames. So I would be looking for some of these extremes to get tested, so we can see obviously the type of reactions we get on 2 and 3 deviations away from the weekly mean. When oil is range bound, it's fairly simple to follow the book and just see if there's interest above or below deviations away from mean. So I think you can use that as well. I don't want to get too into detail with that just because it'll be a long video. We're already at 15 minutes. I could do a completely separate video really on how I trade oil and how I've set up some of these things you see on this chart, as well as things like this. So this is all proprietary, but as far as what it's based on, it's relatively simple. So again, big thing for oil, the pivot really is 64. If we start bidding above 64s, I think oil could have a pretty nice move to the upside, pretty significant. I'd be looking for $1 or $2 higher, potentially up into 66s, and then I'll be looking for I'll be searching for some bids down into the bottom of last week's value on V contract. So we'll be looking around the 62.3 areas, and then I'll stay short if we start offering below basically this range down here in 62.40s. So hopefully that helps. Bit of an overview on oil. I had some people ask me if I could cover it. So intraday oil, usually I'm pretty active on Twitter, and I'm saying exactly what I'm looking for because it does change a little bit day to day, obviously. So if you want to follow me there, and if I make any observations, I'll put it there. So hopefully that helps. Should be a relatively straightforward week as far as data. There's not much. I think Friday potentially with Powell could be a big mover. Obviously the FOMC minutes could have a bit of volatility, but it's pretty light as far as that goes. About 70 points of range from the Friday out the money straddle priced in for ES. So we'll have to see if we break outside that. But again, we're trying to hold outside of a huge trading range. We're trying to hold outside of multi-week balance. It's really going to be about whether or not we can hold outside, whether or not there's initiative buying up here to get those continuation long trades, or if buyers start to struggle, we start to see some exhaustion, and we start to see some larger sellers enter the market, which we did see on the NASDAQ last week. So we'll have to see if they continue. Hopefully that helps. If you find any of this helpful, please like the video, subscribe if you haven't. Appreciate your time. Thanks.